You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everyone. Welcome to the Infinite Banking Mastery Podcast. Thank you for being here. I hope you're enjoying your spring. I wanted to go over today the different ways to pay back a life insurance loan to your policy. Now, there's different ways you can do it, lots of flexibility, but there's really two main ways to go about doing it, but then there's flexibility within those two ways. So I'm going to try to cover this and help bring more clarity to the process without confusing you. That is my goal. However, if you do end up confused or feel like you could use more clarity, remember that when working with me, I will make sure that you know how to do it, what to do. And when it comes to that time, when you have borrowed money out and it's time to pay it back, that I will be there coaching you, making sure that you know what you're doing and helping you come up with that loan repayment amount, talking you through it, and then helping you get it done. So I'm not going to leave you hanging. Okay. If we're working together, it's going to be okay. I just want to kind of go over how it works and what it would look like for you to begin these loan repayments on your policy. So the first way, and maybe the most easy to understand, that will be more clear in your mind when you're thinking about it, is just simply to pay the company back. Just have an EFT draft from your account and pay the company back. They can draft it every month. You can select that draft date and they will just draft it each month going forward. I like this way because then it's like set it and forget it. It's going to happen. And just like every other one of your automatic drafts, it happens in this way. You're doing the best you can with your policy and you're making sure to recycle those dollars and replenish them. So for example, even if you take out a loan and let's say it's June the 1st, and then you take out a loan, you want to pay off some credit card debt or some sort of debt that you have, and your normal credit card payment is June 15th. So you could begin your loan repayment to the life insurance company on June 15th so that you can take the money out, pay off the loan, and then have your regular payment that you would normally make to the credit card company go to your life insurance policy instead. Or if you prefer, you could say, take a month off or maybe 2 months. I wouldn't go forever because then you're not going to want to set up a payment to yourself. But you might say, well, let's start that loan repayment July 15th instead. So now you have a month breather from that payment. Maybe it will help you to do something else you want to accomplish that month. So you can control that. You can decide what the draft date will be. And then once they are drafting on that date that you selected, you can change that date at any time. You can say, you know what, that date's not really working for me anymore. I want to change that draft date to a different day. Or let's say some sort of hardship has come up unexpectedly, and now you maybe need to take a month or 2 or 3 off from your loan repayment. And so you can just tell them, can you just stop drafting for this amount of months, or we just stop it and then restart it when you're ready to go again. This is a very awesome benefit when you are making these loan repayments to yourself, because how would that be possible with any other loan or debt that you have? If you have a car payment, a mortgage, your credit card payments, whatever it is, you can't just say, oh, hey, I'm having a rough month right now, or I broke my leg, I'm not working for a little while, I have less income. Can you just shut off those payments for a couple months? No. Can't do it. So that's one of the things I love about borrowing against my life insurance policy. I'm in control of that. And if I need to stop those payments for a period of time, I can. And then I can just restart them and go from there. I also can decide to start with whatever payment I want and then change that payment. I can say, well, I'm starting off at $150 a month to replenish this, just move over this payment I was already making to some other debt. And now I have more cash flow. I'm going to increase that to $500 a month and get it paid off faster. And so there's different ways that you can do that, and you can be in control of the payment and change the payment whenever you want. So within this first example of being able to have the company just simply draft the loan repayment from your bank account, the most simplest way to think about it, you also have the option of simply just paying them back whenever you want without the draft. So you can just give the company a call, or we have a form you can send in if you'd like to mail it in. You just send in the funds that you want to go towards your loan whenever you want. So normally we're encouraging people to pay yourself back with interest. So it's a regular payment that you're sending in. But however, you also can just send in chunks of money whenever you're ready. You could do it every 3 months or twice a year or even once a year. You could pay it as a lump sum whenever you want to just knock down that principal and pay down that debt. So it's different. Whatever somebody prefers, they can do it however feels best to them. My favorite way is really just to have it draft directly and go straight to the company. So the second way you can set up your loan repayments to your policy is to set up an actual new bank account at a bank. So you're going to set up this separate bank account. You're going to call it something different so you know it's for your infinite banking transactions with your whole life policy. And then when you set up a payment plan for yourself, you send those payments to your separate bank account. So let's say you take out a loan for $10,000 and you want to pay yourself back $200 a month. You can send that $200 a month to your bank account first, and then you can either, again, have it drafted from there and go to the insurance company, or you can pay it in lump sums whenever you want, like I just described. So the reason why people would even bother doing this, why would I want to set up another bank account just for these transactions? The main reason is because when I went over before, or at least I covered this in one of the previous podcasts, is that when you're paying yourself back with interest that is greater than the amount of interest the life insurance company is charging you, which we would recommend for you to do, your policy can only hold the amount of money you borrowed out and the interest that they are charging you. They can't hold the extra interest that you are paying into the policy or that you want to pay yourself back. And so you can use this other bank account and you can send these payments. And this way you can charge yourself whatever interest rate you want for whatever time period you want. And you will be able to make those payments for the full time period into this separate account. And then you're going to have the payments from there be drafted to the life insurance company, or you're just going to send in a check or call in and pay over the phone to repay your loan to the life insurance company. But in the meantime, you're accumulating this cash inside of your bank account, your separate bank account. So that bank account will be able to hold all the payments that you have that you've structured with for your loan repayment through an amortization schedule. If you have a 5-year loan that you've created, you want it to be a 5-year payout or payment period, and you want to have an interest rate of 10 or 12%, you will be able to do that and send all those payments for the full 5 years to your separate bank account. And from there, you'll replenish the life insurance company. And because the life insurance company will actually be paid back more quickly because the life insurance policy cannot accept a full 10% of interest paid back into the policy. So then those extra funds left inside of your new separate bank account can then be used however you please. They can be used to pay back a different loan to a different policy you might have going on. Maybe you have more than one or one on each family member. Or they could be used as future premium or as paid up additions premium for your policy. Maybe you have a paid up additions or a full payment plan for your policy, but maybe you're coming out short 1 year or things changed a little bit. Now you have this money that you've been paying into your separate account that you can use to fund your full premium. Or maybe you want to start a new policy and you can use those funds to help fund that paid up additions for the new policy. So you have different ways and different things you can do once you're paying it into this separate bank account. And that just helps you to be able to actually make payments per month to yourself at a higher interest rate than what the insurance company is charging you and for the time period that you would like to pay yourself back. Well, I hope that this was understandable that you were able to follow what I'm saying. And if not, or if you simply would like to learn more about how a policy could help you, how it could work for you and your family, I would love to connect with you. Please reach out to Valerie at alphaomegawealth.com. That's all I have for you today. Just remember that if we partner, if we're working together, I become your IBC coach. I will make sure that you know what to do when it's time to take a loan. We will coach you through that. And we will make sure that you are utilizing your policy to the best of your ability, that you are doing the best you can, keeping it as efficient as you can, paying yourself back the best you can with the budget that you have. My team at Alpha Omega Wealth Northwest, we always want to make sure that you are understanding what's happening, that you understand and that you are learning the system and that you know what to do and that you feel confident about what you're doing and that you're doing the best that you can to keep your policy working in the best possible way for your future so that when you get to your retirement years, you will have successfully used your policy all your life tax-free and that you'll have those funds there again to use for your retirement years, again, accessible tax-free so that you have that tax-free pool of cash to reach into so that you don't have to worry about that pool of cash being taxed since we don't know what those tax rates will be and they are very likely going up. Thanks again for being here, for listening in. I hope that you have a great week. Until next time.
This is thepodcastfactory.com.